Hello, my name's Lydia, and I work full-time as a clinical pharmacist. A year and a half ago, I bought my first long-term rental property as a complete beginner to real estate investing and landlording. Much has changed since then in terms of interest rate, rent prices, the housing market, all of which can affect a rental property investment. In this video, I'll walk through my process, how I found the house, how did I know it was a good investment, has it been a hassle from the perspective of someone who is doing this as a side hustle, whether I plan to do more long-term rentals versus short-term rentals, because if you've seen some of my other videos, you'll know that I have another house that I operate as an Airbnb, and how this rental property has been performing for us so far. I'll also sprinkle in how I'm factoring in current market uncertainties as I'm actively looking for my next investment. I wanted to first set the stage for why we got started investing in real estate, and some of this may apply to you as well. For one, it offers us some diversification in our investment portfolio, which has thus far been a little heavier on the stocks and bonds, and I suspect this is probably quite common for someone who holds a professional or corporate job. Single-family housing as an asset class has had a pretty solid track record of appreciating throughout time, and so we wanted to get a higher percentage of our money into real estate. The second reason is the tax advantages of rental income. This can probably be a whole dedicated video, but briefly, part A is that the monthly rental income from the tenant is offset by depreciation of the property and whatever other expense I spent on the house, such that in the end, the amount of rental income that does get taxed is reduced significantly, if not to zero, which is fantastic for anyone who's already at a higher tax bracket. And then part B is that some of this income comes in the form of loan pay down, meaning the tenant, as they're paying rent, is also helping contribute to the equity in my mortgage. And of course, that isn't taxed. And then C is more of a long-term thing, the ability to pass on generational wealth without worrying too much about taxes. For example, if I bought a house for 200K and then like decades later it becomes 500K and I pass that 500K house to my kids, that 300K difference will never be taxed. Of course, I also have the flexibility of selling it before then and reinvesting the money, and there are ways to defer taxes there too. And similarly, if I just needed some money like to pay for college or help a kid with their first house, I could withdraw money from the equity of this rental property without selling the house. I would pay interest, but not taxes because I didn't realize any taxable gains. As you can see, a lot of optionality as a long-term play. The last reason for me for investing in real estate is the cash flow. Even though we didn't expect a rental property to generate like a life-changing amount of money, a little bonus cash is always nice. So how did we get a house? I started with choosing a market, and in this case I picked the local area because I already understood it well, and I wanted to target young professionals who are kind of just like ourselves from 5 to 10 years ago. I really just started browsing Zillow initially, and then later looking on MLS after I got a realtor. Her name is Kara, she's amazing, she's well connected in the community, and just really transparent when we go to showings. Like, she would point out that there are signs of water damage on the wall before I would even see it, and I really appreciated that. I highly recommend connecting with a realtor as one of your first steps. I know there are many other ways to look for houses off market, like from a wholesaler, driving around, or like sending out mailers, but until you learn the market, it's actually really hard to tell what a good deal looks like anyway, so basic Zillow is a fine place to start. The second step was getting a pre-approval from a bank or a lender, which helped set the budget for what I was shopping for, and also I needed a pre-approval letter to submit offers to houses. Right now, with the higher interest rates, make sure you've got good credit to start with, and if you don't, work on repairing that as you are also learning real estate stuff. I then studied the market for two main things. The first is how much can rent be? This can be based on square footage, the number of bedrooms and bathrooms, the amenities, location, and finishes that contribute to the desirability of a place, and how competitive the market is. Are rentals sitting empty for a while, or are they getting rented out really, really fast? You could get really organized with this, like build a spreadsheet with addresses, the specs of each place, how much they sit on the market for, and how much they rent for. I thought about doing this as my learning process, but the one column that was really hard to quantify is desirability, which is kind of subjectively pieced together based on location and how nice something looks. So I used the eyeball method. I go on Zillow every day and look at what's what's available for rent. And not gonna lie, that first day when every rentable listing is new to me, it was a lot to absorb. But as I built that habit of looking every day, I would only be looking at the new listings. And over time, just by pattern recognition, you'll start to figure out how much rent would be for a place just by looking at the pictures and the basic specs. Your goal is to get to the point of being able to accurately name the rent price so that you can run your calculations and to be able to look at other places for rent and be like, oh yeah, this one charging way too much, it's gonna sit on the market. And you'd be right. Specifically for 2023, I am noticing an increase in vacancy in some markets, but again, real estate is super local. I'll leave a link below to Fred where you can find a lot of this data. The second thing I studied is house prices. How much should a house cost? Similarly, this is also affected by number of bedrooms, bathrooms, finishes, the square footage, location, amenities, and how competitive the market is. And similarly, I kept practicing until I got to the point where I can look at a house, just the pictures and the stats, and be able to figure out what the final sale price would roughly be. To get there, I basically just looked at new listings every day until again, I develop a sense of pattern recognition. Right now, as houses are sitting a little longer on the market and some markets are already seeing price decreases, I'm definitely watching closely to see how prices are changing. With those two pieces of the puzzle down, it was time to analyze and see what would make a good investment. I built a calculator from scratch to help me with this analysis before I realized that there are free resources online. I'm so glad I did this though, because it helped me understand what are the parameters that are going into the calculator. If you're interested in this calculator, I did make a prettier version from my original scrappy one, and I'll leave a link below. For every potential house, I would start with what I think it could rent for, minus a month or so of vacancy, and then plug in my best guesses for the expenses, and then work backwards to figure out how much I could offer to buy the house. This is often not the same as what the house could go for as the final sale price, and obviously if the final sale price is lower than my number, I would go with that lower number. But more often than not, what I'm willing to offer is the lower number. And what this discrepancy tells me is not that I should raise my offer price to this higher number, but just how likely, or I guess unlikely, my offer would get accepted and what other creative ideas I have to sweeten the deal. Hopefully in this year and the next one, the market we are all entering is not as crazy competitive. I remember on one house, we were one of 19 offers. We didn't get that one. As you keep plugging in numbers for different houses that you're seeing, you'll get a lot faster at this math. Just for 2023, with interest rates rising and housing prices still staying high, I'm noticing the 1% rule might be back. You may have heard of the 1% rule from other places. All it means is that if the house is, say, $200,000, then roughly 1% of that, so $2,000, is what you would need to rent it out for every month for the math to work. It's just a very quick gauge to see if something would work out as an investment instead of going through the full calculator. The 1% rule wasn't true when I was looking for a house in the lower interest rate environment because I could accept less rent and it would still be a cash flowing property. Anyway, as I do the math and if the math checks out, then I go to see the house. At the showing, which became really quick, like 15 minutes in and out at the end, I basically look for just structural things, like how old is the roof? How old is the HVAC? Are there really expensive repairs that I expect to be coming up, like a retaining wall? How old are the windows? And then if you have rental licensing requirements in your area, make sure you understand what those are and look for aspects that would require major repairs to fit code. So as an example, here, basement windows have a minimum size requirement to count that basement room as a bedroom because people need to be able to climb out for fire safety reasons, which makes sense. Some older houses that were built before the latest code may not have the right size window, and if it was a primary residence, no one's gonna come and be like, hey man, you need to upgrade that window. But as a landlord, to get a license, you will need to change that window to a bigger one, and that is going to cost you money. Alternatively, you would have to sign a paper that says this room cannot count as a bedroom, and then legally you can't list your place as a 3-bedroom, 2-bath. It'd be a 2-bedroom, 2-bath because that one basement room wouldn't count. None of these things are complete deal breakers, but just an expense you have to keep in mind of when doing your calculations. As I continue my daily habit of looking through listings and plugging them through the calculator, the other thing I do to make sure that I'm learning from this experience is I heart the listing on Zillow. And this way, when the house sells, I get an alert on the final sale price of the house, and I get to compare it with what I offered and what I suspected it would go for to see if I'm right. I keep all the math I do on the spreadsheet just as separate tabs, just so I can go back and look. And then again, if the house becomes a rental property and it is rented out, I get to see how much it is listed for rent per month, and I get to compare that number to what I would have offered, and I follow along to see if it is rented at that price and how long it took to rent out. This feedback loop gave me more information on how close I was with my projection. And over time, as I got more things right, my confidence also grew. And it was like, okay, I'm on the right track. I can do this. If this is helpful to you so far, I want to invite you to subscribe to the channel. I share whatever I'm learning, real estate or Airbnb or whatever side hustle, from a realistic and practical perspective of someone who works full time. I do feel like a lot of the real estate videos tend to be folks who go from 0 to 20 doors in a year, or like how I built a multi-million-dollar empire from $50, which is inspiring in its own right, and I watch those too, but there's gotta be other people like us, right? Just regular people who are aiming for a few rental properties as a side thing, sharing tips with each other and helping each other out. Anyway, moving on to how long it took to get the house. It was a really competitive market in 2021. People were foregoing inspections, putting in cash offers, adding appraisal gap clauses. None of this applies anymore, thank goodness. From first getting a realtor to finally closing on the house, that was 4 months. During this time span, I looked through every single listing that came on Zillow that is within my budget, and I formally did the math on a few dozen houses. We saw maybe half of those and put in offers on about 10 total houses. Like, not 10 offers on the same day, obviously, like as they came about. Sending in that first offer took longer, partly just from the mental hurdle of, oh my god, I'm really doing this for real life. Am I 100% sure this is objectively a good idea, or did I just listen to some hype on the internet from a talking head? But I know I did my homework. And at some point, I have to turn in the assignment, and I knew I had to just trust myself to take action. The other part that made the first offer harder was just reading through the purchase agreement, just asking questions and understanding what each part means to know what I'm signing and what I'm getting myself into. And I'm so thankful for our realtor who was so patient with us. But as we got more comfortable, each offer became just a really quick call. Like, I'm thinking this much for an offer, 20% down, inspection contingency, this much for earnest money, closing date of blank. What do you know about the sellers and how do we make it a win-win for everyone? And then boom, she emails us the purchase agreement, we sign it, and then we wait to hear. And we would keep repeating this process. The house we eventually got was kind of out of a bit of luck. We were out at a showing of another house, actually, when we got an alert from MLS that this new listing came on. And I remember joking, who puts out like a new listing late Sunday afternoon? Because usually people set them up like Thursday so that they would get the weekend crowd to come to showings. Since we were already out, our realtor called the listing agent to see if we can go see it like right now. And the listing agent was like, wow, oh really? This place is not ready. Like, I don't know how you already know this, which sounded kind of disorganized and maybe amateur. I'm sorry if the listing agent sees this, but we thought, maybe there's an opportunity here. We eventually saw the house a few days later. It looked great. We put in an offer after we did the math. And I believe for some time we were actually the only offer, and the listing agent was trying to drum up this other offer and kind of saying, oh, you gotta send in your best and final, but there's another buyer. And we did go back to relook at the math, but we did our analysis thoughtfully the first time, and the math hasn't changed. What we put in was already our best and final. And so we stuck with our offer. They turned us down and went with the other buyer, who I think they kind of drummed up using us as leverage, saying there's this other competitive buyer, you gotta send us a better offer. That's my guess. And we go back to the drawing board. No big deal. Not the first time we got rejected. We just keep looking. A month later, the listing agent came back and said the first offer fell through. And when we asked why, it was about radon levels. And the seller actually offered to pay for a radon mitigation system, but this buyer still said no, which sounded to me like a little bit of buyer's remorse. Like, the initial offer was a little bit more than they would have wanted to pay. And now that there's an excuse, they're like, oh, I don't know, let's back out of it. Again, that's just my guess. We took them up on their offer to install a our radon mitigation system at their cost. We redid a whole inspection to check everything out. We asked for a few more repairs for them to pay for, and they accepted our original asking price. I think even though market conditions have changed since then, the lessons learned here still apply, and that is patience and equanimity. I think it can be easy to get riled up by like, oh my god, there's some other buyer, or kind of like FOMO into something, if you will, especially if you've been putting in all this effort and still no house to show for it. But if you stay clear-headed and stick to the math, because really that's the only thing you can truly rely on. And what I mean by equanimity is that when we got offers rejected, it was important to not get impatient or discouraged or feel bad about ourselves and just keep going. And then on the flip side, when our offer finally got accepted and we're close to getting a house, it was also important to not let the high of like winning a bid cloud our thinking regarding our next steps and inspection items and other important items in the due diligence process. Moving on to the next step of the process, how did we rent the house out? The first thing we needed to do was to get a rental license, and there were a few initial hiccups, like the door needed it to be a different size, and we kind of have a very inconsistent building inspection group here, so you kind of never know what they're gonna say, even though this house had been a rental before and somehow it passed their test before, it didn't pass again. But whatever, we got it done. It just took a little longer than I thought. We hired a cleaner to do a pre-move-in cleaning. We took the pictures ourselves, and some people might also choose to use a professional photographer. It really depends on your market, your competition, and your skills. And then we did some basic editing and color correcting and posted them to Zillow. On our Zillow posting, the rent price that we used was the one that we used in all the calculations before, which was determined by the market rents. On our listing, we also wanted to be very transparent about the requirements we have for tenants applying. So like credit score, income, having a reference, number of pets, and requiring renter's insurance. It's important to do this ahead of time so that you can apply the same set of standards to everyone and not run into issues of being inconsistent and looking suspicious for discrimination. We got a number of interested individuals who sent us messages through Zillow, and to keep the messaging back and forth to a minimum for like coordinating a showing, we set up a Calendly account just so people can pick a time that works for them easily. After a little bit of back and forth answering questions and whatnot, we had one showing. They applied and they checked all the boxes. We ran the credit check through TransUnion's Smart Move, which was I think $35, which the tenants paid for in their application fee. I crafted a lease through Avail, which is a software, and I think it's $5 a month. I have a link below if you want to get a $50 credit, and that should last you almost a whole year. It was nice to get that lease kind of electronically signed that way. And this is the same software that I use to collect rent through AutoPay. It makes everything just so easy. And we signed a lease, they moved in, and the same people still live there today. They've been amazing tenants, and we're just so lucky to have them. Now, moving on to the important question of how is this rental doing, time and money-wise? I want to be very transparent in terms of the amount of work and the amount of money that we're getting out of this, because this information may tip you one way or another. And if you appreciate that, I would love if you can give this video a thumbs up. I can't legally give anyone financial advice, but the next best thing is just us all honestly sharing our experiences with each other. Let's start with money. We invested about $53,000 as a down payment and initial repairs, plus the couple of months where it sat empty while we were waiting on the rental license. Our monthly rent income is $1,600, which was as expected, and our more standard monthly expenses include a mortgage, which was a little over $9,000 for the year, insurance about $1,000, property taxes, which are also going up significantly next year. For last year it was $1,800. Software with Avail was $60 for the year, and then the unpredictable part is repairs. We had budgeted for repairs at roughly 1% of the house cost, so like $2,000-ish, but we had to replace an air conditioner, which was over $3,000. And we knew it was old when we bought the house. We just didn't know it would be in the first year or in 5 years. Anyway, that was replaced, and we also had some electrical repairs for $100. So total for the year, a revenue of $19,200 minus expenses gives us a net profit of $2,350. $2,324. Relative to our initial investment of over $50K, the cash on cash return is only 4.4%, which is pretty mediocre and below our predicted. And I think the main reason for this discrepancy is that AC, and hopefully we don't have an expensive fix like this every year in the future. Because of depreciation from a tax perspective, that $2,000 income is essentially tax-free for us this year. And I guess also keep in mind, the $2,300 of profit was actual cash, right? I can't really count how much the loan pay down or appreciation of property values added to the equity of the house, but those are gains too. And if you factor those in, I guess in theory, I am over a 4.4% return. Now, how about time? It was certainly a learning curve with this being my first rental property. It took daily studying and practicing, but it wasn't difficult, if I'm being honest. Like I said, the whole thing took about 4 months from getting a realtor to eventually getting the house, plus like a month and a half between closing date and eventually renting it out to the first tenants. After the tenants have moved in, I think I've done like less than 10 hours worth of work, mainly with the AC repair, and then another time to go pick up mail that I forgot to forward, but that was it. So for funsies, let's do an hourly rate. If I invested like 100 hours in the beginning, plus 10 hours since renting it out, so 2,324 divided by 110. That's $21 an hour, which is above minimum wage, but compared to my real job, that's less. But I think in the long run, if every year I'm only spending 10 hours on this property and it makes me the same amount of cash or more, then my hourly kind of grows, right? Plus there is equity that's building in the house, and I'm not replacing a $3,000 AC every year, then the math should be a lot more favorable for owning a rental property. Another way to think of it is in 30 years, when the mortgage is paid off, then I kind of just have a bonus house that grew from my initial $50K investment, and that's regardless of whatever happened with the cash flow. And then lastly, how do I compare this to short-term rental and which one will I do more of? This really deserves to be a whole video on its own. The too long didn't read is, I don't know. Because time-wise, a long-term rental is just so much easier. I could do like 10 long-term rentals in the time that I spend on one Airbnb, and my time is valuable. This does not take up really much mental space at all, and there's no anxiety of a guest calling randomly in the middle of the night, which hasn't happened, but it could, right? And as a person who already works full-time and has kids and has just too many things on their plate, mental space is valuable to me. But money-wise, of course, Airbnbs can make way more. And with interest rates being this high, it's actually kind of hard to get a long-term rental to still generate cash flow. So I guess the question becomes, how much of a money difference is there and how much of a time difference is there, and do those things match up, and which one do I value more as far as the quantifiable comparison? But there's one more thing about short-term rentals that I can't quantify, and that is the fun. Like, I get to go and enjoy it myself with my family and make memories at this house that I own. And it's also actually fun setting up and decorating a space and going shopping for it in a way that I wouldn't necessarily shop for my own house. Because sometimes when you don't need to do something, you just feel like you should save the money. So with these pros and cons, my plan is to simultaneously study both for whatever market that I'm going into next, and I'll let the math decide for me. Comment below if you have a preference, if you have any opinions. I'd love to know what everyone's thinking. And overall, I'm really glad that we tried both a short-term and a long-term rental, so that now we have both perspectives going into the next investment. If you have any questions, feel free to leave them below. I can do a deeper dive in a future video. I hope this video was helpful to you, and I hope you're having a wonderful day, and I will talk to you next week. Bye!